Let's check in now with Alan Knuckman, the Chief Market Strategist at Paradigm. Hello to you, Alan.
Hello, Angie. As you know, for me, it's all about price. Now, I'm seeing a 4 performance, not a poor performance in the stock market. And you can't say perform without 4.
What's happening with your trading?
All right, so you're understanding the theme. For me, it's all about 4,400 here in this S&P. So we've been unable to push through that. We had dropped below 4,400 September 19th. There's still a gap up above that's not been filled. And we've been between 4,200 and 4,600 for 4 months. And so we're just sideways with this important 4,400 midpoint that will tell us the next market move.
Your new trade is from the semiconductor sector, and I have to say those chip stocks have been struggling, Alan.
All right, let's talk about our trade trigger for today. I'm looking at Micron, MU again. So we've played this position many times. What I'm seeing here is some bullish leverage buying, which is very positive. And so we're seeing a tech takeoff in the fact that tech did fill up that September gap up above, whereas the S&P hasn't just yet. So this stock is 30% off its 2022 top, whereas the NASDAQ, the NDX, is only 10%. So it's got some catch up to participate with the rest of the tech takeoff.
What's your call options trading plan on this one, Alan?
All right, to get more into Micron, it's trading around 69 right now. Like I said, it's about 30% off that top. It's been between 60 and 70 here recently for 6 months. A breakout of this range targets 80. More importantly, that 60 to 70 range has a midpoint pivot at 65 that we can lean on as some important support level.
What else can you tell us about those MU shares?
The way to play with MU, again, trading around 69 or so. I'm looking at the January 6250 call, deep in the money option. It's going to act like the stock. It's got 3 months of time and a 75 delta. Again, 65 is that key level of support, which is above our strike price. Give us the right to be long from 6250. Now, this is a stock that has been stair-stepping higher with a series of higher lows all throughout the last year of trade.
Let's get to your trading day takeaways.
All right, let's talk trading takeaways. Number 1, 50-50 Fed. Now, the chances or the odds, based on what the markets are telling us, of another hike, one more hike in rates is now 50%, whereas it was only 25% about a week and a half ago or so. So it's increased, but the market is still staying around this 4,400 level in the S&P. All right, number 2, 50-50. Again, the S&P is having trouble getting above that 4,400 level, and it was up 50 points on Monday, down 50 points on Tuesday, but the good news is 50 points is only 1% when it comes to the S&P. And number 3, S&P spring. This consolidation leads to a breakout. The longer something trades sideways, the more significant the move is on the upside or the downside. So between 4,200 and 4,600, there's a 400-point move. So the move on the downside, if it breaks out to the downside, it would target 3,800, which is down below, but still above those lows from October. And then the upside breakout, that technically targets, and I follow what the charts tell me, that technically targets S&P 5,000. Follow the charts.
Thanks for your Trader Talk, Alan. Go to businessfirstam.com for where to see our show on TV.